as we all know as trader, is simply the more pips you hold, the more profit you stand to make as a forex trader. So guys, in today's video, I'm basically going to break down to you a complete guide on my simple trading strategy that has enabled me to actually target high pips in the market. And when we are talking of high pips, we are talking about 100 pips and above. So guys, before we proceed, let's give a big shout out to our today's sponsor, lightfinance.org. Light Finance is one of the best trading platforms out there, boasting over 4.3 rating on Trustpilot, which means that they are highly positive and users have positive view of them. And they offer one of the best and easiest trading platforms out there as well. So basically, when you come over here, you have access to MetaTrader 4 and 5, C-Trader, so forth and so on. And they offer some of the best spread, which is as little as 0.0 spread for some trading pairs. And also has the fastest execution when it comes to trading. On top of that, they offer over 600 trading pairs ranging from forex, stock, commodities, cryptos, and so forth and so on. And to top it all up, it's even advisable for non-good traders to actually use, as they offer copy trading, which is a way for you to actually make profit without having to know how to trade. All you basically have to do is simply copy already profitable trade on their platform from other profitable traders, and you can basically be making profit on autopilot. So hello guys. Now I'm here to actually help you solve your problem about how I actually come up with all these huge pips. Like basically this week alone, which is this, I'm recording this video on Saturday, so the week before this particular video, we actually did some crazy numbers from 3 different trades. Now this is the first trade here, taken on the 30-minute time frame, which actually gave us a solid 172 pips. If you know what 172 pips means in the forex market, then you know what I'm saying. Then another on GBP JPY. This got 280 pips. And then finally we had this last one on GBP USD. Now this actually ran up to 99 pips and then dropped back to 78 pips. So here we still have a full target of 170 actually, so we are still holding to see. Now all of these trades were dropped in my Telegram community. If you are not part, you can actually use the link that will be available in this video description. Now you see the GBP USD was the last one. This one was strictly for my VIP community. I did not drop it over here. Now over here in the main community, I actually dropped their free one in the main community. So if I should go back here, I'm going to find them here. This is a GBP USD, and then this is the AUD, the GBP AUD. So basically all these 3 signals were all dropped for the community, so I'm not sharing audio signals with you. So now guys, with this said, let me just go straight and then now break down to you what exactly this strategy entails and how I'm able to actually run up these huge pips over and over again. So guys, the first thing I do when I come onto the chart is basically I try to understand the direction the market is moving to. Now when it comes to trading, the direction the market is moving to is very important, because trading to the wrong direction might favor you a little bit, but when it comes to actually hitting up huge figures, the most important thing is simply having a clearer view of the market and being able to look at the bigger picture and be able to hit those figures, because it's not easy to catch 100, 200, 300 or 500 pips, mostly based on how the market is moving right now, that the market is moving in an ununderstandable way, because 1 minute the market is a downtrend, the next minute the market is an uptrend, with Trump and co actually doing all they can do to put the market in a messy manner. But still, with all of this, we are still sailing through. Now let me break down my trading strategy to you. And this strategy, if you look carefully, whilst I'll show you the results, some trades were taken on the 30-minute time frame, some were taken on the hourly time frame. This to tell you that it doesn't matter the time frame you are trading, this strategy actually works. Now on this strategy, for me to trade, the first thing I look for is basically a market shift. Now this market shift is a point whereby the market actually made a switch from the downside to the upside, or the upside to the downside. Now in our own situation of GBP USD here, the market was on a full uptrend. So for that reason, I had my market shift here. Now after I have the market shift, the next thing you need to look into is simply you look for a break of structure. Now after the market shift, taking your trade immediately from the level there is not really ideal, because if the market comes back, there's a chance that it might break it and then make a switch down to the downside. Now in order to have an assurance that even if this market comes back, it won't be easy for it to break this level, we look for a break of structure right after the market shift. So in this scenario, we had a market shift here and then a break of structure right here. Now this market shift accompanied by this break of structure is basically means that what our level is 100% valid, so we can actually trade from it. Now after that, I get to mark my level. Now you can see here I had this level marked at right here, which is the last bearish candle before the bullish candle. You can see when I'm marking my levels, the most important thing when I'm identifying my level is that the bearish candle that qualifies my demand level should not be bigger than the bullish candle that came right after it. So you can see the gray candle here is a bearish candle and then the blue candle is a bullish candle. So in this sort of situation, this gray candle, and when I say it shouldn't be bigger than the next candle, I'm not referring to the wicks. I'm referring to the body of the candle itself shouldn't be bigger than the other candle. So now we have that. Now next of thing is simply when this market made its retracement here before creating this breakout structure, it actually kept a leg here. Now this leg, in some situation, this leg could be a double bottom, it could be a mini resistance whereby the market range a little bit or something. Now regardless of whatever leg that he creates, this leg here should always be your level of liquidity. The reason why it should be a level of liquidity is simply we have a lot of newbie traders who are into the market that trade from any level that comes into their mind without actually thinking. And the truth is that the institutions, the big guys in the market actually target this sort of people. So they look at people who trade from these levels, and once they see that there's this sort of levels in there, they know that there are definitely a lot of orders pending there. So when they come in, they might trigger it, respect it for some few minutes to an hour, but the truth is that they will eventually break it to the actual level they want to trade from. So for that reason, this level becomes my area of liquidity. Now after this, I basically wait for the market to retrace into it, and then I take my trade, as simple as that. Now this is all about the strategy. Now on the other hand as well, let's take a look at GBP USD. Now you can see GBP USD as well is the same thing. Now this is a mixture of 4-hour and 30-minute time frame setup actually. So you can see it's a mixture of both time frame. Now we had the market shift right here, which pushed to the top, and then a mini breakout structure right in here. Then the liquidity level. Then waited for the market to retrace into it. Now immediately the market came in here, gave this bullish signal here. That's when I got in and also asked them to get in. You can see we went into profit. The market came deep down and then shot back upward again before continuing the move. Now you see, one thing you need to understand is that in all of this trade, I did not do the setups and take the trades immediately. I always waited for the market to give me my real confirmation, number one, by coming to the level, and number two, by giving me a bullish close that okay, you can now buy, or a bearish close and say okay, you can now sell. Now in some situation, when you make a setup, you might actually miss the level. Maybe the level got triggered, but you weren't with your device, so you couldn't take the trade. But then that is not the last hope. There's also a backdoor to actually take the trade again in case you miss the first arrival. Now the backdoor is simple. Let me use this trade on GBP AUD to explain it to you. Now here is GBP AUD on the 4-hour time frame. Now if you look at the 4-hour time frame, let me come back. You can see clearly that the market made a market shift here. Now market shift is the same as a change of character. Now the market made a market shift here, and then behind this market shift we had a demand level right here. Now after this demand, the market made this pushback here, which I marked as the area of liquidity, and they gave us a breakout structure right here that continued to the upside. Now you see, after a while, the market actually retraced back to the level at this point here. But when it came to the level, I couldn't take the trade. Why couldn't I take the trade? The reason was simple. I missed out, like I wasn't on chart by that time of the day, and probably maybe my phone was on DND, as I will always keep most of my phones. They are always on DND majority of the time because I'm not expecting call or text from anybody. So maybe they were on DND, so I missed out on the notification. Now after that was over, so since I missed out on it, later on I came to check the market. I realized that the market has actually tapped my level and it's actually buying upward. So what do I have to do next? It's simple. I came back to the 30-minute time frame. Now the 30-minute time frame, here's what I did. I waited for the market to give me a breakout structure. I mean a market shift again, because coming back to the 4-hour level, the market actually need to make a downtrend. Now in order for me to confirm that there's still hope for me to get into this trade, what I did was simply identified a new market shift on the 30-minute time frame. Now after I had a market shift, now I still stick with the same setup pattern, by identifying a demand level. I didn't just enter randomly. So the market shift is here. The demand level is right behind it, also marked out. Now basically I waited for the market to see if it will retrace into it, and yeah, hala, thanks to God, the market actually retraced into it. And then I had no option but to take the trade, and I also had a 1:5 as well. Now if I had taken this trade on the 4-hour time frame before, we would have had a longer target. Basically, if I had taken this trade on the 4-hour time frame, we won't be targeting here, we would have been targeting this very top here, and we could have been really up massively. But then one thing I do for sure is that, so we could have closed around 1:7 plus. But one thing I do is that the time frame I used to take the trade is the same time frame I used to mark my entries and exits. So since I did it on the 30-minute time frame, I had to look at the 30 minutes, which is this recent high here, was where I actually look into, and then mark it as my take profit level. So when the market came close, of course we took our 1:5.3 and left, as simple as that. So now guys, this is basically everything about the strategy. It's a very basic strategy. Now in case you don't get everything here, you can let me know that in the comment section. Also join my Telegram community where I will make a further breakdown for you in case you have any question. But if you have any question, drop it in the comment section. Now I've made a full video sharing with you a step-by-step guide on how I make a full top-down analysis using this strategy. Now that particular video will be tagged in the description as well, so make sure you check it out. So guys, see you in my next video. I would like to know how you feel down in the comment section, so please drop it for me and I will actually reply to your comment as well. So guys, see you in my next video. Bye.